All right. Good morning, everybody, and welcome. It's TheoTRADE Chat. It's Don Kaufman here on a Monday morning. Someone has a case of the Mondays. All right. There's 2.5 minutes to go to the cash open here. The Spoos, they're a running. So we're up about 42 handles right now. Look, there's not actually much of a surprise in terms of the S&Ps right now. If you are surprised, it's because you're not paying attention. So some of the geopolitical risk abates, but we have an inflationary issue. One of the first things I want to point out this morning, outside of the fact the S&Ps are up, is quite a lot of volume trading this morning. Almost a scary amount of volume for a marketplace that's up. The first thing, okay, you need to think about is this marketplace stable? With that kind of volume, the answer is, oh, hell no. So I'm going to go ahead and just answer that one for you. We are extraordinarily unstable this morning. We have a huge expected move for the day, a huge expected move for the week. Instability also, okay, well, here's a great reminder of more instability. The bond market right now doing 200 and almost 25,000 contracts, which, and I've said this a lot lately, is some of the heaviest trade we've seen in a very long time. You got to go back a really long time to see this kind of action before the cash session has started. So we've got the bonds down and down big. This is a full 1.5. The notes are down, okay, huge by huge. If you're taking a look at like TNX, it is soaring right now. That's interest rates. So a minute to go to the cash open. We've got a day where we're going to be heavy correlation. You've actually got the financials. They are bid. You've got the energy sector. It is bid. Big tech. It's a little bit mixed. It is a little bit mixed. You know, we'd expect Apple was down a lot more in the pre-market. It's got a bid back under it. Tesla, nobody cares. It's basically flat this morning. NVIDIA has a bid. Meta, okay, has a bid. Again, just keep in mind this morning as we come into this cash open, we're going to start with wildly positive advanced decline line, wildly positive advanced decline line, like full-blown correlation to the upside. We're also going to start with wildly positive tick. Positive 1600 tick at the open. Let's come to it. So wildly advanced, positive advanced decline line here. There's nothing down other than stuff that maybe had news. Even Apple was really, really mild move to the downside. Nevertheless, as I was looking for a huge positive advanced decline line, wow, we're not getting that great of ticks. So right off the bat, there's a big move down in bonds. S&Ps getting squirrely right out of the gate. This is a trading session. Again, I know everyone's looking at it. They're like, oh, the sell side is over. It's all over. I would, again, I would caution you. This is the kind of day that you're going to see a lot of big moves, threat to reversal. I'm not saying we're going to reverse, but there's going to be a lot of threats to see reversals today. We'll discuss that here momentarily. I'm trying to get a feel just like you for what this is going to look like into the trading session. Interestingly enough, again, Apple, which had some fairly negative news about iPhone deliveries and no longer holding the #1 spot in terms of cell phone providers. I would expect that Apple takes a little bit more of a hit. Again, if you look at it in overnight trade, I'm also really surprised how bad the ticks are. Ticks are only positive like 860. This is not that heavy of buy side activity. It's not at all. You can see the Nasdaq took a little bit of a hit. Apple, though, again, this is totally in play right now. It's approaching some of the overnight lows. Stock's down almost $1 from when the bell went off, and it is having drag right now on the Nasdaq. All right, look, if I'm going to look for opportunity today, it's not going to be in the first minute of the trading session. Like if we're going to reverse right now, so be it. There's nothing I can do. I'm not going to come firing and screaming out the first second of trade over here. We dropped substantially. I don't think we're going to just drop. I think we're going to get bid back up right now. We'll get a feel for it though. I can't stress enough the feeling right now in the air is people are already like, volatility's over. Okay. I would counter that substantially. Not only isn't volatility over, everywhere you look on the screen points to more volatility. In fact, more volatility is going to play out today. So anticipation of Apple pulling the Nasdaq even more. Again, extending losses here in the first 2 minutes of trade is Apple. It is pulling the Nasdaq down. If you're looking at the S&Ps, they are still relatively stable, and that is because of rotation, a wild rotation into the financials. So early on, seeing some rotations already. Dogs and cats living together. Ooh, you know what? The S&Ps are not going to hold this together much longer if Apple continues to slip. Tesla, it's kind of sideshow Bob now in terms of the market cap, but it is down. I don't see much of anything else being impeded other than Amazon. Looks like it's seeing some selling going on in the first couple of moments. This was way up in the pre-market, right? I look at a lot of stuff in the pre-market. That was way up there at 188. It's already dropped at $1.50. This doesn't start to get its feet back under it here, which it is right now. We're going to see more slippage inside of the NASDAQ. But NASDAQ is underperforming S&Ps by a fairly wide margin right now. Most of the time that we see NASDAQ on the leading edge of buy side or sell side. So it is critically important that we are seeing NASDAQ underperforming over here. That looks kind of special. So the SPOOs now are only up some 38. There's some selling going on. As I said to you guys, look, if there's going to be opportunities for a reversal, there's nothing I can do when you ring the bell here and we're starting to slip already. There's no entry point to that. So sit tight with that thought. Speaking of that thought, let me just take a quick look at some of the volume. Well, that's obscure. Bonds are also right near the lows of the session. So, looking at this tape, what's going to scare you first? The fact that Apple is down pretty big, over 1%. It's kind of hard for the NASDAQ to rally. I'm more concerned with the bond market. How can the bond market not be rocking the rest of the marketplace? Again, I'm not going to sit here and preach to you that you're going to get a big reversal today, but there are many things on the screen that really point to some fairly heavy volatility today. And that's what I want to focus on for the first few minutes, because what you're seeing on the screen right now, this is not just about volatility intraday. This is about volatility. It's coming. I mean, this is a big move in the bond market, following some really big moves in the bond market. But what's so interesting about this one, it's literally saying geopolitical risk is abating. The bonds are down, okay? But the bonds, they really got rocked even further. They were already down this morning. They got rocked further, though, on retail sales. Retail sales numbers came out this morning. For those of you that did not see them, it's okay. You didn't miss much. But the retail sales numbers came out and they were good. Now, the retail sales are not, I was chatting back and forth with none other than Brandon Chapman this morning. The retail sales numbers are not inflation adjusted, which implies that inflation alone can actually account for good retail sales. You have to love that. You want some manipulated data? How about you get some heavy inflation and some good retail sales numbers, but retail sales numbers that are good point to inflation, or inflation that's high could point to good retail sales numbers. I don't know, but I do know one thing, that a good retail sales number is inflationary and could be caused by inflation. It's very confusing. It's very confusing. Anyway, it really rocked the bond market. And ironically, as it rocked the bond market, the S&Ps took off to the upside. This is I wouldn't say that this is a quiet cash open. I think the place to be watching right now is inside the NASDAQ. The NASDAQ looks like it's going to recover here. Nevertheless, as I say that, there is a bid back under Apple that might fade. Look, this is still anybody's trading session here. Okay, let me point out to the other factors on the screen that really stand out. Okay, some other factors on the screen. First of all, NVIDIA's performance this morning, well, right now kind of sucks. So let's go look at some of the option stats in here. There's nothing going on. Try to buy some calls. We laughed, we cried. There's nothing going on in there. Amazon was only up 38 cents a couple seconds ago. It's bouncing around a little bit. Microsoft has a good bid under it, but it's just not enough to hold this marketplace together, right? I'm just looking at some of the options order flow, and there's nothing special, spectacular, or otherwise going on in here. Meta, okay, has been the market's like love child lately. I don't get it either. Okay. Yes, Meta's the market's love child is Meta. Okay. Boy, isn't an ugly child. The fact of the matter is it remains bid, but this would be a pretty big linchpin. It looks like obviously it's at lows of the session here, but if Meta starts to come back and pull back, it will continue to put some pressure forth to the Nasdaq. Look, I am not ready to call this marketplace a reversal just yet. Okay. If you think you have a feel for today, I don't think you do. Okay. And I'm going to tell you exactly why there's not a great feel. One of the big standouts this morning that I haven't made mention of yet has got to be volatility. Okay. The volatility, I'm sorry, that has not, okay, sounded the all clear, not even close. So I hate looking at VIX, but I'm going to tell you exactly why I am looking at VIX, right? The fact of the matter is VIX is not sounding the all clear, and we're seeing high degrees of correlation. So this is where everybody looks at advanced decline line. They go, oh, that's the most bullish thing I've seen. On the contrary, you should look at this and realize then the market's going to move as a unit. It's not going to move in too many degrees of autonomy. So it's only going to take a few things reversing, like an Apple, a Google just reversed, okay? And all of a sudden you'll crush the entire advanced decline line. So high degrees of correlation isn't per se bullish. If anything, high degrees of correlation is much more indicative of days that you can have reversals. Now, as I said, I'm not ready to call a reversal by any stretch of the imagination, but you have many factors here that point to heavier vol throughout the course of the day, which implies like, there's a lot of trading sessions where you rally and just like, that's it, the day is over. As Jeff Bierman would say, algorithms have ruled the day. This, okay, looks a lot more funky than that. Now, granted, all right, we're up big. The advanced decline line is spectacular. We're still very far away from the daily expected move, which, by the way, the daily expected move is 52 bucks. Come back to that in a moment. But I was bringing up volatility because volatility, right? Look, it's early on in the trading session. A lot can happen in terms of volatility. This volatility, okay, bid up. It's starting to get crushed down just mildly. So why am I not looking at these vol futures? Because I want to make sure that everybody's looking at the right volatility futures. The volatility futures, which are the VX, okay, J24s are not the ones you want to be looking at. Those expire in 2 days. You want to look at the K24. So you look at VX K24. Type that in, okay, that would be the volatility indicator of choice. Now, it is starting to come down. Markets are starting to rally again. That's fine. That's spectacular. Nevertheless, taking a look at this contract is still heavily, heavily elevated at this point, okay? Until these contracts drop substantially, you're constantly kind of, like on notice. You just want to kind of keep an eye on things. VVIX has come down, but again, nothing is really sounding all clear. However, as I say that, like when I say nothing is sounding the all clear, as I say that, I'll also counter and say like, but look, you're only 11 minutes into the trading session, okay? And we are seeing a lot of price action. 52.11. If I have to mention 52.11 to you guys again, it's pretty much ad nauseum at this point, but the 52.11 has held a lot of weight, okay, a lot of weeks back. And if you are into like technical patterns, this is the 30-day 1 hour. Oh, it's up, it's down. Okay, do you like that? I just drew it's It's not what's going to happen. It's what I want to happen. Well, volatility is in the air in any regard. Um, let's talk a little bit about some of the movement you should be anticipating for today. So here's a huge move back, and that is in the financials. This one could be opportunistic, and I'll tell you why. The financials are by far and away the most oversold in terms of major sectors that move markets. Like what I, by the way, and for me, major sectors include like energy, which got a little bit of sell side activity, maybe the Nasdaq, which didn't really get much sell side activity. But the point I'm trying to make over here, there's only really, to me, energy. Energy matters right now, of course, geopolitical risk, but energy matters, financials matter, and tech matters, and there's nothing else. Because whenever I mention like sectors, somebody's like, yeah, man, but look at like XLU. Okay. And I'm like, I can look at XLU. That's fine. But XLU isn't going to move squat. And it hasn't been doing anything. But the financials are by far and away the most oversold. I mean, this thing is getting slaughtered recently. It doesn't look like that big of a move. It's only $2. But if you put it on a year-to-date basis, this is a sector that was up almost 12%. And then the sector was up only 6%. It got slammed in the last 2 weeks. Pretty big sector too. So it gets a bid back under it, obviously being helped a little bit, okay, by the likes of like some Goldman Sachs today. They like me. Okay, Goldman Sachs, which also got absolutely crushed, has a bid back under them. They really, really like me. Nobody actually likes this thing. Okay, even Goldman Sachs doesn't even like themselves. It's amazing. Speaking of which, bonds are actually breaking to lows right now. So as I'm going into this, okay, I suggest to you, you sit there with a chip on your shoulder because of an advanced decline line or strong positive ticks. The ticks have completely rolled over. The strong advanced decline line is indicative of high correlation, which actually leads categorically to more reversals. But moreover, this bond market, like how is that not going to inflict damage at some point? Okay. This is big. This is a big, big move inside of the bond market. And that is the kind of crap that's going to keep me on the edge of my seat because it can roll the financials over. Clearly, big tech right now, I'm just going to call this scattered and broken. I mean, big tech, yeah, I got it. You know, Microsoft is up 1%. Check. Okay. Apple's down, basically offsetting any Microsoft. Check. I got that one. Amazon, okay, maybe getting some footing back under it, but it's all kinds of sketchy. Google is basically unchanged. Meta, okay, also sketchy as can be. Tesla's down by 3%. Normally, I wouldn't even make mention of it, but that thing is getting annihilated. Okay, they had news. We have all kinds of news. Nvidia takes the cake over here with a huge rally. Okay, at the bell, but I'm not sure it has the order flow to substantiate the claim today. There's definitely some call buying activity. It is not huge in there. Okay, we'll see if this continues to perpetuate itself. Nvidia right now is literally holding that Nasdaq together. Okay, Microsoft also, it's a good bid, but it's nothing in comparison to Nvidia in early trade. Speaking of Nvidia, it has not performed lately, okay, at all. I mean, it's unchanged since right here all the way, you know what, your 2.5 months of being massively unchanged or inside the same exact range. So as I was saying, it's not the trading day that the people maybe thought it was going to be. By the way, we've also seen a lot of days recently, okay, for argument's sake, where the S&Ps have been up 40. You would expect the NASDAQ should be up 200, 250. Am I right? Think about it. The NASDAQ has been the leader, okay, of the pack. What's rallying today clearly is the financials. The financials, okay, are substantiating a lot of the gains of the S&Ps. They're being helped a little bit by NVIDIA. But overall, okay, the NASDAQ is funky, and it is funky this morning. It is a laggard, and the ticks continue to roll over. The advanced decline line, this is as high as correlation pretty much gets to the upside. But as I said to you, anybody's trading session today. With that being stated, when I say anybody's trading session, okay, you can't be surprised to see this marketplace reverse multiple times throughout the course of the trading session. Also, for those of you that joined a little bit late, the volume this morning is absolutely massive. So for a day that we're up, I mean, before the cash open, you had 350,000 contracts. You're 15 minutes into it. There's some big size going through today, really big size. And that is not indicative of a quiet marketplace. Some of the size is starting to die out, but yeah, mark my words, it's going to be coming raging back over here to a theater near you. So let's go look before I look in detail about like expected moves and so forth. Let's look at a few other aspects. One being, I think that really is driving markets today. Okay, we have an absolute crap fest right now going on inside of the bond market. You are almost to a 2-point move. You are 17 minutes into a trading session, and the volume is picking up to the downside. This is the kind of day that can slaughter bond markets, period. Pay attention to it because you slaughter the bonds, they will come for the S&Ps. Mark my words, they will come for the S&Ps if they continue to see sell side in this bonds. This is going to make everybody nervous, especially when we start rotating back to dollar. Okay, look how fast, son of a, I hate that they put that last price as an action on here. Okay, I'm gonna be okay. It's all good. And Schwab have earnings today. That piece of crap. It's up. You're killing me. Anyway, the expected move for the week is $100,000.36. All right. Anyway, the somebody asked, so I said it. Anyway, there's some sell side activity this morning. Well, first, let's start with this. Retail sales, there's a bid, some sell side activity, there's a bid back to the dollar. The dollar has been fairly wild lately. But earlier today, I was saying that the marketplace, in terms of volatility, is not sounding the all clear, nor is the dollar. Okay, you see the dollar backing off because I sure as hell don't. They're still running to the dollar. Now, geopolitical risk, I want to push that aside for a second because we all know that there's still maybe some geopolitical risk out there. Okay. I think the best way to look at geopolitical risk, maybe it's abated a little bit. Maybe. Okay. Not a great feel for it. So the geopolitical risk can be seen, fairly clearly in oil. Okay. Oil really isn't moving much today. I wouldn't count like a 1% move as oil moving down. The geopolitical risk, maybe it's felt a little bit here in terms of the volatility instruments, like a little bit of VIX, side order of VVIX over here. Again, put away your hedges, but not a great feel, okay, if the geopolitical risk is abated. Nevertheless, okay, the dollar being this strong, any way you want to twist this, there's still some big risk on the table. So it's just like one of these other factors that I'm looking at that just doesn't really add up today. Yeah, well, financials better hold this thing together because the financials start to slip from here. It's over for the S&Ps. They'll start to cave in. Tesla's down pretty big today, and Apple looks like it's going to continue to see some sell side. So we'll see how this plays. Okay, Nvidia though, literally breaking the highs of the session. So everything going on right now in this marketplace, you are seeing some of these tech stocks start to reverse. Like Google's just not performing today. Amazon started ripping to the upside, but you have 3 stocks today that are really kind of holding the market together, right? Maybe 4 at most. And the financials, which are getting a little bit squirrely early on. Interesting trading session thus far. But again, the question for today is, can the Nasdaq actually hold us higher? And Nvidia is saying, oh yes, right now. Anyway, when you start to look down the list, though, some of the usual suspects, what has to happen today to keep these gains in the marketplace is the bonds have to kind of mellow out. I would say that would be first and foremost. If the bonds don't quiet down, you're going to have a rough session in the S&Ps. So let's go look at expected moves for the week. Right. I already shared this morning the link inside of chat. Happy to do that again for those of you that do not have it. Okay. The SPX expected move. Okay. So I just popped the link in there. The move itself, okay, is $100.36. I'll pop that in there as well so you guys can see it. the reference though today, and again, I want to kind of give you a little bit of orientation early on in the week on what you can kind of anticipate. So the first thing you have to recognize is the weekly expected move, which I just mentioned a moment ago. So we'll put it in here. The weekly expected move equals $100.36. Okay, so that's your weekly expected move, and that's the one actually depicted on the screen in front of you, right? These are big moves, but even if we hit the upper edge, just bear with me for a second, even if we hit the upper edge of the weekly expected move, you're still stones throw off some of the all-time highs. That's okay. A break to the downside would be significant. It's all the way down to like 50-20 inside of the S&Ps. Last week, we literally hit the lower edge of the expected move almost to a T. One of the things I want to also give you a little bit of perspective on today. Yes, the S&Ps are up 40. Yes, the S&Ps, the SPX is up 41. But check this out, and this is what shocked me this morning. The daily expected move this morning is plus or minus, what was it, like 52 bucks? Yeah, 52.10. That's the daily expected move. That is huge. So one thing, have a little respect for. See that move right there? Okay, we're not even home yet. We haven't even hit what you're supposed to hit on the day. That's why I kind of take this move right now with all due respect. There is no respect, but with all due respect, I take this move with kind of a grain of salt today because you're expecting even bigger move than this by far. That would be normal to see a $52 move. So hurt me. There's a lot more movement left in here. And to see us rally another 10 handles, not only wouldn't it be unusual, okay, it would be well within the line of where we should be. So keep that in mind throughout the course of today. Okay, it's also one of the reasons that, look at this, the ticks are actually negative. It's interesting. Also one of the things that is keeping me from looking for any reversals this morning. So if you're looking for like trades, okay, for reversal trades, you simply do not even consider any type of reversal trades until we like hit like an edge of an expected move. And you can look at equity products for that, but in the S&Ps, if you're looking for S&Ps to reverse, you're not even there yet. Okay. Somebody was saying Tasty straddle this morning was showing 32. You don't look at the straddle this morning. Okay. No one gives a damn what it is in the morning. It's where they traded it last Friday that actually sets the expected move. So where we went out last Friday is the expected move. To find that, you never look at the morning, okay? Because it doesn't include some of the risks of the weekend, yada, yada, yada. But if you look at this, that's 52.10, okay? And it is deadly accurate in there. So on a 15 vol, even this morning after, okay, we've been open and we've been open now for, 25 minutes. We're still sitting on about a $27 anticipation of movement. That's now. And I get that question all the time. They go, why do you use the static, okay, expected move? Because it's the right one to use, because it's where people rolled their risk from Friday into Monday. Like those that actually roll their risk on a daily basis. The expected move, though, is $52, which is freaking huge. There's not a lot of days you come in here with a $52 expected move, especially with like retail sales. Nobody gave a damn about retail sales this morning. Okay. No one cared about retail sales. Retail sales happened here. We were already up, okay, this morning, right here. Let me zoom into retail sales. We're already up right here before the retail sales. You're up like 35 handles. And we jumped a little bit further, and maybe, 30 some odd handles. We jumped a little bit further off the retail sales, but the number was big because of the geopolitical risk. So you push the geopolitical risk aside because right now you're like, oh, we got through that one. Woo! Did we actually get through it though? Okay. Did we? Well, the volatility is in fact starting to back off a little bit. This would be confirmation, okay, that we're through some heavier risk. But when you start looking at this, you're like, ah, crap. we're nowhere yet. We're still in like, look, if the VIX closed right here, the VIX closed right here, right now, it's basically the second highest close that it's had year to date. So the point that I'm trying to make is this rally, it doesn't mean, anything, nothing. Okay. Assign absolutely nothing to the rally. You haven't hit the upper edge of the expected move. The volatility hasn't collapsed yet. The bonds are down freaking huge. The dollar is actually rallying. Okay. It's not stable. And that is the only thing that you can surmise right now inside of this tape. Okay. And if you don't believe that, you just look at the Nasdaq futures and you'll understand what instability means. Okay. I like it. Huh. So somebody's asking again, so for tomorrow's expected move, we look at what tonight's close show. Yes. So, but very careful. When you look at expected move, I always use the SPX because the SPX is going to be the most efficient. You say, well, why? You could use furball. You could use spiders, and spiders are different. Spiders will differ just a little bit from SPX. Anybody know why spiders differ from SPX? Huh? Does anybody know why the SPY expected move differs from the SPX? Just a little bit. Okay. This is the $1 million question today. But basically, you could use the spiders of the SPX, but you have to wait till 3:15 or 4:15, 4:15 Eastern time, 3:15 Central time, because these products are open. Okay. These products are open until then. Okay. Yeah. The economic news coming out right now is, whatever. Okay. This is nothing. Okay. So, no, it's not the dividend can definitely impact spiders, but nominally and only for like a couple of days in an entire year. Dividends is not the right answer. Okay. It's not the right answer. I want to see if anybody gets this one. It's a hard one. Okay. So has nothing to do with cost of carry. It's not in cost of carry over here because cost carry is still built into both of them. Okay. The ES doesn't count. Overnight trade doesn't count because they would still be arbed perfectly together. Okay. Oh, come on, people. It's the obvious, right? Cost of carry is all calculated. It's all part of it. All right. So with that, okay. Raj got it. Okay. Raj got it. Well, it's not really the cash settlement as much as it is you have a European style settlement, which is SPX, versus an American style. American style means you can actually be put stock. Okay. There's a very, albeit minimally, okay, higher risk associated with spiders because you can be put spiders. Whereas in the SPX, it's a cash settlement. So the implied volatility is slightly different. Okay. You like that one? Huh? Yeah. Okay. How about that? Anyway, there's again, they both close at the options in the SPX close at 4:15. The options in the spiders close at 4:15. So there's no difference there. The primary difference of why there's implied volatility, there's a very, very small amount of implied volatility higher inside of the spiders because of an American style option. American style option means there technically is early exercise or assignment, whereas the SPX is a cash settlement instrument and does not carry that, yada, yada, yada. It's an interesting, yeah, okay. It's good party conversation, okay? Well, you came to the right party. Oh, come on, man. I showed up today to actually see the markets do something. What are they doing right now? Nothing. Can't get comfortable in the seat today, right? I'm having issues over here. Yeah, someone has a case of the Mondays. Yeah, we're gonna go look at a couple of positions. I don't like this. Okay, let's go look at the QQQ. So in the NASDAQ, I put on a position, okay, on a day the marketplace was down. And I did this because, first of all, I really wanted to put on an in-out spread. But secondly, okay, NVIDIA. I put on the in-out spread because NVIDIA really looked, okay, hostile on Friday. And look at auto expected moves. like Nvidia starting to reverse. I was trying to hop on that one. Don't even for 1 second, okay, worry about the QQQ trade. It's got 25 days left, and it's like an $18 move is priced in, and we don't even need but like a $2 move to see degrees of profitability. So we're going to be okay. But if you missed this trade, you're still more than capable of putting that trade on. So it's a couple of pennies less than it was the other day, right? And again, all I'm doing is placing the same trade I did the other day, so nobody has to freak out. I just want to show you that you can still place the trade from the other day. Okay, he shoots, he scores, and I bought it for 77 cents, which is what I paid the other day, 82 cents. I think I paid 82 cents. So it is slightly better. Let's create a duplicate order. I really want this one at 76 cents. Okay, we'll see if that happens. Anyway, very comfortable with that trade. So just everybody calm down. You know what's amazing? What's amazing is how far the QQQ has moved. How far the Qs have moved, and yet the trade that we put on is only moving by like 4 or 5 cents. I think that's fairly crazy. If you were so inclined and wanted to place the same spread, I am using the May 10th expiration. I am buying the 441 puts. I am selling the 439 puts. 441s that I'm buying, okay? 439s that I'm selling. I still have problems that the QQQ is in the 400 range, okay? I remember trading this product in the $80 range. Got to go back a couple of years to see that, but you know what that means? Okay. Do you know what it means, the $80 range? I remember trading it actually all the way back here. It means I'm old. That's all it means. Do you know what that means? You're old? Yes, that is what it means. Okay. I blocked out the whole 20 thing, but I remember trading. I had won a huge trade on that thing when it was in the $80 handle. Okay. Yeah, if you remember that too, it means you're old. I was talking to Gianni. Gianni's smiling in chat right now. I was talking to Gianni, I don't know, a couple of months ago. Okay. Talking to him about the financial crisis. Like, what were you doing there? He's like, I think I was in high school. Okay. Were you in high school at the time? Oh, it was a very scary time to be in high school. It's like the financial crisis. He's like 12. Okay. But I will give him this. Gianni was like the kid that was 12, is a better beard at 12 years old than I have now. Okay. He was definitely the guy that bought the beer in high school. Definitely the guy that bought the beer. Okay. No question about that. Vin was saying, I remember it in the 40s. Vin, let me question this. Do you remember the 40s or you remember the QQQ, okay, in the 40s? All right, just making sure. Okay, now we're having fun. Okay, Vin, I don't think you're old enough to remember the 40s. You got to be baby boomer. You got to be like 1950s. I'm going to give you 1953. Huh? I'm giving you the benefit of the doubt. All right. Okay. By the way, I'm totally wild guess over there is 1953. Okay. What was born that year? I don't know. Cool cars. Okay. Yeah, it was Q's in the 40s. Okay. But now we're playing the game of what's the market on Vin's age. Okay. Oh, 49. Damn. I was close. I was close. Continuing on. So I saw mention in the chat of like the geopolitical risk. You know, one thing about the geopolitical risk, oil would be a pretty good instrument to look at for that. There's no question about it. So the one thing that I've learned over the years is, and in all seriousness, we all have thoughts of like, okay, it's not going to be over, and that's okay. Trust financial instruments to a much larger degree. Okay. They had cars back then. No, I'm just kidding. Trust financial instruments, and I really do mean that, to weigh geopolitical risk. There's always the chance that a financial instrument can be off a little bit. But when I say trust financial instruments, so oil's only down $1. Okay. To me, it's down. It's only down 1%. I would say categorically that is not sounding the all clear yet in the Middle East. Okay. I would say the more troubling thing is that they're still moving to dollar. It's minimal right now, but people, okay, the dollar like is not sounding the all clear just yet. And again, I'm not saying anything other than the fact that capital is still very uneasy about what clearly has transpired. And you have to use a little bit of an interpretive dance. No, you have to use a little bit of interpretation though. But if everything was going to be just fine, oil could be down $4 or $5. But then again, oil didn't necessarily rally all that much. Okay, no one knew what was coming when oil rallied that much. And frankly, oil, okay, had rallied and faded a little bit on Friday. Anyway, as I'm saying this, what moved though big was the dollar. So if the dollar was the instrument that moved up substantially on Friday, and yes, I see the S&P is reversing, and yes, I'm just going to let it happen. Okay. The trade's not there for me today. And if you listen to anything I said this morning, you should have expected multiple reversals. It's just, I don't trade them unless there's a good probability for me to do so. I don't care what I think. It's not about what I think. It's about pricing and probability for me always. But the one thing that the geopolitical one, okay, that I think is so important is that this instrument, which is dollar, rallied huge on Friday, which is indicative of some big risk. Nasdaq's really getting hit right now. The dollar continues to bid back today. I don't think that's a good sign. Okay, I don't. And look, as I said to you, I don't know what's coming, but don't listen to any media. You got to block all that crap out. Okay, there's lots of conjecture. It's fine, whatever. There's one other instrument that had rallied big in a reversal fashion on Friday, and it completely reversed today. This, though, is largely being impeded, like the bonds, by the way, largely being impeded, in my opinion, by not geopolitical, but this morning, those retail sales numbers shook these bonds pretty badly. And this is serious right now because what's going on in the bonds at this point, it's no longer, okay, this is no longer what you think it is. Oh, some sell side activity. You could start to see panic right now in the bond market. And we're going to have to start talking about this right here, right now. And that is bring up the last 3 years. Last year, at what very similar time frame to this, okay, it was only last year, we were actually in a little bit of a banking crisis. Okay, does everybody remember that? Well, what happened was this 30-year had sold off. Okay, and again, lows were achieved here in October, thing bid back up, but there was unrealized losses that were really substantial. Okay, and it was a year ago, but that's when that was up here. We're trading all the way at 114 right now. And again, try to pack this into one chart. I could do that. Look at this, S&Ps. We might see a full-fledged reversal here. Nasdaq's barely holding it together. We got an incoming from, you know what? Interesting. It's everywhere. The advanced decline line's moving as cohesive as it ever has. I'm not going to call this like over and done with just yet, but it got ugly. That got ugly in a hurry. There's some real volume starting to pick up. If anything, this is, if we're going to bounce, it's somewhere in this neighborhood right here, but this does not look lovely right now. Look, as I said, just kind of let it happen. Let it happen. There's nothing, you're going to not jump, you can't start taking shots right now when you're shorting into the hole. We just traded, let's call it 52.11, and we're trading, 51.85. It's 20 points without a bid back under it. So let it happen. My concern right now is much more inside of the bond market. The bond market is starting to feel panic. And how do you know? Look at the volume. It's starting to feel some panic inside of the bond market. So you're going to get some banks that could be in very distressed levels like that. Like overnight, you can get distressed in the banks. Look for this to come in huge right now. So, they'll all start crying out at one time too. But if you have unrealized losses at some point, you may have to get out of them. If they mark to market, put you in a tough position. And unrealized losses could be just horrendous, just horrendous. I have to wonder if Charles Schwab's starting to sell off too, because this is the mother of all unrealized losses in here. I know it had earnings today, but okay. Wow, Tesla's getting bad. Another 3.5%. Okay. By the way, I am not under any circumstances ready to call the S&Ps dead for the day over here. Again, as I said to you, this is going to be a volatile day. We're going to have reversals today. Just stay with me over here. If you think that I have a great feel, the only thing I have a feel for right now, and I just urge you to understand this, I can see volatility breaking through everywhere in this marketplace. That's all I can see. Okay. I can't see where we're headed right now because no one can, but I can see the volatility breaking through. And again, the most serious implications being, of course, that the bond market could crash right here, and already is. I mean, down 2 points in a day, just to give you a feel for the bond market. And again, the bond market, it doesn't have expirations every single day, but I am actually going to bring you into like expected moves. You know what? Let's go to the TLT. I think the TLT is a more effective way to do this. Go to the TLT, okay, and look at some of the expirations in here. That's like Wednesday and Friday, like even by between now and Wednesday. Now, granted, I know it's Monday. Somebody has the case of the Mondays. You're looking for like $1.38 move between now and Wednesday. You're already at $1.70 move. I can't stress this enough. The week is expecting maybe like $1.60 move. The whole week has already happened. It's $1.70 move. So now I'm going to bring up auto expected moves and just show you and substantiate the claim that the bond market, okay, this thing could crash and burn. The S&Ps, I just saw them, they sold off and then bounced. That is the dynamics of hedging. That means they're probably going to sell right back off in here. The Russell went negative on the day. The bonds continue, okay, to get hammered. This is the most important player in the room right now. Forget about ticks. All you want to do is be looking at bonds and volume here. If this thing continues to sell off, there are firms that are going to have to bail positions, okay? It's really, really getting serious out there. This is also the kind of trading session. If you got the capital, okay, I may go out into this Ultima account. I may end up selling a few puts in TLT in this Ultima account because I can smell panic in the air. Like it's all in here. The biggest move that you've seen in recent history in the bond market is probably close to 3 points. That actually happened last week, and this is follow through. This is some of the most horrendous selling though that's been seen in bonds in quite some time. This is where if the Fed doesn't get the job of killing inflation, okay, the bond market will do it for them. And that's kind of what you're maybe seeing playing out. Speaking of playing out, look at the volatility here in the Nasdaq in the last couple of moments. This thing bottomed out here at about 92. It's already had a 50-point rally in the last couple of seconds. I mean, you're 3 minutes, 4 minutes away, and it's exploding back to the upside, trying to hold on to some of the gains. It's all like NVIDIA, a little bit of Meta. This has got a bid back under it. Really sketchy trade though in here. Anyway, somebody, Neil was saying, yeah, they changed the symbol. It's TNX CGI. It's TNX colon CGI. Okay, don't forget your colon, people. Don't forget your colon. And this is it's exploding. And what else do you say about interest rates? Okay, and again, this is a trading session that thus far, hands off Mr. Mouse, man. Hands off the mouse. Okay, we could easily, the S&Ps could still be up $50 today. Okay, I'm not going to discount that. Okay, but volatility is breaking through in this marketplace, And oh boy, did that get fun and scary, and very likely is not over. Look how amped up some of the size and the trade coming through here is, right? And into the marketplace right now looks all broken and disconnected. Dogs and cats living together. I'm surprised that the energy sector, like the first sign of some sell side activity in here. Okay. Yeah, again, interesting trading session kind of shaping up. How are some of our positions reacting? Neither here nor there. I mean, everything right now, it's working. I'm looking for anything I can close. Okay, I've got some calls that are on the dance floor that are up 33% here. I know in another account, I've got some calls that are up like 18%, some calls that are up 25%. Nothing else really going on. Okay, in the premium selling. Okay, look, we're just headed in the right direction. That's all I can really tell you at this point. But the options that we have on in the premium selling, they have 107 days left. Right now is where they're going to start to burn some time, which is a very good thing. So these will help us quite substantially. Look, the bottom line is we're not moving up anymore. So we'll see what plays out. Yeah, I just can't get a handle though right now on this at all, other than to say, look, the tick's actually flipped back positive. The advanced decline line, okay, halted and we're kind of reversed back up. Let's go look at some individual stocks this morning. Again, I wish I could, fire off some positions in this on an intraday basis, but this is kind of like you don't want to get caught, and I call this crossfire. You don't want to get caught in this right now. What I can tell you about trade on an intraday basis here, okay? First of all, you're in a position right here. You could easily bid back up to highs. You could also absolutely tank, okay? And the read on that isn't here, meaning it's not found. The read on what the S&Ps are going to do is not found in the S&P chart, okay? On the contrary, it's not found in ticks. It's not found in the advanced decline line. The read on what's going on in S&Ps, once you start getting really volatile in markets, okay, and again, I think this is like a wonderful time to talk about it. Once you start getting really volatile in the markets, this side of the chart doesn't even exist to me. I just don't give a damn. I'm not even looking at it. I have it up on another screen. I don't even look at it. Okay. I don't give two beeps about what we're doing on the chart here. That doesn't matter. What matters at a time like this is start looking at things like volatility. Okay. I think it moved. Okay. So if volatility is moving, somebody is scared. Somebody's scared. Okay. And every little nuance of a movement in vol is going to make a difference. The other key factor today, clearly the bonds are in play. The bonds, maybe they hit bottom here, maybe they didn't. Okay. But the bonds are still seeing just huge volume going through. For those of you that don't know, like bond markets, okay, this is slow, it's meaningful. They think about what they do in the bond world. 700 contracts in a minute, 1,000 contracts, pretty good amount. We're substantiating almost 2,000 contracts a minute in here. I mean, it's huge volume. The notes, the notes are huge by huge. Already traded 1.6 million contracts today. So if this is, stand back and let some of the big boys play in here, but this marketplace is what's having incredible influence on the S&Ps. So I'm just going to tell you, bottom line, if this turns around, starts selling off again, it's over for the S&Ps. Over. Okay, they're not going to hold up today. And you're kind of like, left on the edge of your seat with that one. The dollar, okay, reverted back a little bit. Yeah, if this bids back up, it's over for the S&Ps. And to try to wrap your arms around what you think the S&Ps are going to do, it's less about the S&Ps now. It's more about some of the other instruments. It's just a risk on, kind of risk off, day. I would say this though: these financials may get smashed, and yeah, I missed them. Okay, I missed it. There was no time to get into this trade. We bid up. We're up there for a couple moments, and we already slipped a little bit. I don't like it. I don't have to like it. I don't even want to like it. Let's go look at some individual stocks. Again, I'm coming into this without a ton of positions on. By the way, Raymond was asking me, I put on the QQQ spread. Okay. the question was when I put on the QQ spread, okay, it's trade date plus 3 days for 30% gain. So let me explain something. Oh, here they come again. Okay, who's they and where are they coming? Who's they and where are they coming from? They're sellers, man. They're sellers. This is what real selling looks like, by the way. Okay. I mean, I'm not going to sugarcoat this. The dynamic, the bounce, the dynamic, the bounce, the dynamic, like that is what real selling looks like. You always get like that recoil kind of bounce as you know, everybody kind of calms down, the volume calms down, but this is a very important next 2 or 3 minutes in the S&Ps. As I said, I'm not looking so much at the chart here. Okay, I'm looking around the usual suspects, the bonds, and they're just holding on to like grim death over here. But the volatility is starting to get a little bit more amped. Anyway, the next few minutes in the S&Ps are important. So gentlemen in chat had asked the question about the QQQ. So let me go back to the Q trade for just a moment. Okay, so I placed the QQQ. Just a moment ago, we were talking about, we're like, oh, tried for the corner and missed, right? This trade, we bought it for 82 cents. Now it's worth, let's call it 80 some odd cents. I have no idea. Anyway, I know I have more of these, but I don't know where they are. I traded a bunch more of these and I don't know where they are. Okay, I gotta look through the account and like find the rest of the QQQ trades. Anyway, it's trade date plus, okay, 3 days. So if we traded it on Friday, we have Monday, Tuesday, Wednesday to get out for 30%. And that's it's so it's T plus 3. I use T plus 3 for the 30% gain. That is all. Like again, my positions this morning kind of meandering. I'm down a little bit because I've got some JP Morgan on. I'm down a little bit because I've got some Nvidia. Yeah, Nvidia is beating me up a little bit today. Boy, this would be interesting if Nvidia started to see some sell side activity. Okay, and what's interesting about it? Because you have a marketplace where Nvidia is up 2%, and it's just barely holding the Nasdaq's head above water. Nvidia is the only thing right now standing between the Nasdaq and the deep dark of the abyss. Okay, call buying continues to go on in here, much above call selling. Obviously, there's 70,000 contracts on the ask or above versus 57,000 contracts. Okay, might I just say though, Nvidia, excuse me, its size in here is not huge. It's got some decent, activity in here today. I'm not sure though it's going to be able to hold together. Okay, I am telling you right now, I think Nvidia is questionable on the day. To which, if Nvidia can't hold it together here, it's bye-bye Nasdaq. I mean, because what do you got? You had Microsoft. That thing was up huge. It's at lows of the day right now and continues to slip. You have Apple. Apple's off the lows of the session, but it's down 1%. Doesn't look like it's going to choking over here. Doesn't look like it's going to rally out. Amazon. Okay, you believe this pile of crap thing is sitting at basically all-time highs. In fact, on the weekend update, I was talking about this in the weekend update. Let's go over here. Let's switch gadget. Let's come over here to Scratchpad. Okay, there's a couple of points I was making on the weekend update that are really, okay, really critical in here. And that is, so geopolitical risk, I want to stress this again and again. Geopolitical risk isn't, in my opinion, okay, why we sold off. It was just the match in the gasoline of a marketplace that was already getting all kinds of freaky. I can't stress this enough, okay, in today's trading session, okay, tomorrow and looking forward. Geopolitical risk definitely plays a role, unequivocally. But you can look at like bond markets. If there's a lot of geopolitical risk, the bond markets wouldn't be selling off, 2 and 4 ticks or 2 and 3 ticks. Like that's a really big freaking sell-off, okay, for a market that would be suffering from geopolitical risk. The market right now is and was seeing a hell of a lot of risk before it. The expansion of volatility, and again, I'm literally like drawing what look like Bollinger, bands on there. Yeah, no kidding. I know what they look like. But we saw this huge, okay, compression of volatility, and now you're seeing the expansion. So we were already expanding in volatility, okay, before any geopolitical risk. We already had the dollar bid well before the geopolitical risk was hitting. And I'm not just talking about the weekend's events. I'm talking about what actually happened, weeks prior to that. It doesn't seem to be playing, okay, the critical role in here. It seems to be the catalyst. Okay. I was talking about in the weekend update, the volatility has been very careful attention to VVIX. VVIX got to astronomically high levels we haven't seen in quite some time, right? VVIX crested over the 110. And today, is it down? Yeah, it's down. Not enough. Okay. We are not at all sounding the all clear. Like people are not relinquishing their hedges. They're, on the contrary, they're still holding on to the hedges. Okay. Volatility was very close to backwardation already. Okay. So we're not near backwardation, but we're stone's throw off of it. It's about 40, 50 cents away from being in backwardation here. That's some serious crap, because let me just counter with this. If the market sells off today, let's say the S&Ps go negative, holy crap, you're going to be very close to backwardation. If backwardation kicks in, bam, you're going to get punched in the face in this marketplace. Okay, they're really going to hit the S&Ps if volatility goes into backwardation. And there's not much I can give you that says, oh, this is definitive. We go into backwardation, you're going to see some blood in the S&Ps, bad. And the reason being, volatility hasn't been in backwardation in a very long time. Okay, and when it goes into backwardation for the first time, the only hedge anybody caught short, okay, these 37-day vol futures, which would be a lot of firms, anybody caught short these are going to have to sell S&Ps into it. So that is a very careful thing. And you want to look at, and I want to be very specific, you want to look at May, the 37 days, these May, which is the K24s. Look at the K24s versus the M24s. Okay, if this, which is 1680, eclipses this, okay, which is 1727, you're in deep beep. 50 cents is still a decent distance. It is. But if you see sell side today, it's going to get all kinds of freaky, right? And that's going to be the important combination over there. I was talking about dollar bonds, gold, yada, yada, yada. The bonds, I got to tell you, I'm shocked right now to see them down this much, because be honest with you, I thought we'd see the opposite. Okay. I thought we were actually going to bid back up on the bonds this week, and I was actually going to sell some calls, look for them to revert back down. That's over. The bond volume that you're seeing thus far today, to me, is indicative of there's somebody's in trouble in here today. Okay. The bond market, somebody's in trouble and somebody's puking. Maybe they already did puke. The volume just reeks, though, of panic. Look how high the volume is. Okay. Today, that was all of Friday, previous trading sessions. Huge volume in here. So have some freaking respect of what you're seeing going on. I was talking about a significant correction inside of the financials. Okay, significant is an understatement. And the financials, they feel like they can't get off the mat. Okay, they picked up their head this morning, got punched again. They have completely reversed on the day. I don't care that they're up, 0.7%. Okay, they're being offered for sale, and I think the bonds have a lot to do with it. Right, that's what's getting scary right now. Is this is going to just get ready to snap the entire financial marketplace. One thing that people haven't put into perspective is keep those rates higher for longer, just high enough to break something. Okay, I'm a big believer you cannot kill inflation, and I've been saying this all last week, and I'll say it again today. You cannot kill inflation, okay, without breaking something. So just realized I have to turn it over to Jeff Bierman here momentarily. The last thing I'll say is this, and the real reason I brought this up, there's been no damage inflicted to tech. I don't care what anybody says, there's been no damage inflicted to tech, right? Tech is doing lovely at this point and will continue to do so, right? So again, just ease up about that. Tech is unscathed. Again, tech is unscathed at this point in time. So again, keep that in mind as you're seeing products like Google, literally. By the way, I'm looking at this while I'm talking about Google. Products like Google literally are sitting basically at all-time highs. Products like Amazon, basically all-time highs, right? Meta, effectively all-time highs, completely and totally unscathed. All right. And I think that's what gets scary in this marketplace. Again, not an easy market to handicap. Sit back, relax a little bit. Okay. You're going to be just fine in here. Just let some of the trade activity play out. If things start getting a little bit more crazy throughout the course of the day, I'll definitely hop back into the room. I do have to turn over to the professor. Jeff Bierman is going to be coming on here momentarily. And today he's going to be talking about locked in space, the time conundrum of overbought, oversold conditions, part 2. I'll give you the real conundrum. It's Jeff Bierman.